afternoon, everyone, and welcome to Stock Market Today. Also, happy Friday. It's Alyssa Corum here with Ken Shreve, and on today's show, we're going to be taking a look at Broadcom and maybe what that means for chip stocks in general. We were expecting a second half of the year recovery, and we're also going to be taking a look at Home Depot and Comcast. But before that, let's break down the action for the major indexes. We did close off lows, but the Nasdaq still closed down about 0.5%. The S&P 500 down 0.1%, and the Dow was able to reverse slightly, ever so slightly higher. So, it looks like for the Nasdaq, we're still hitting resistance at that 50-day.
Yeah, and that's still an issue for the Nasdaq. Late in the session, the Nasdaq was trying to rally nicely off lows. I saw it was down about 0.2%, 0.3%, a little more selling into the close. So, looks like we ended with a loss of about 0.5%. And definitely the resistance at the 50-day moving average is pretty easy to see here. But have to give credit to the Dow and the S&P 500. We have several closes in a row for both of those indexes above the 50-day moving average. So that's definitely the silver lining in the market. Pretty good price action in the Dow and S&P 500. Nasdaq still struggling at the 50-day moving average, as you mentioned. Pretty weak performance by semiconductor stocks today.
That's true, although I will point out, though, that the Nasdaq was still able to close with the gain for the week. That's also silver lining. Yeah. All right, well, let's take a look at some of those individual names. You mentioned weakness in semiconductor stocks. Broadcom was really the weight there, with those shares finishing down about 5.6% in heavy volume. It was able to close off of lows a little bit, but essentially weak earnings and a weak outlook. It was the expectation that a lot of these chip stocks were able to see improvement in the back half of the year, but with this weak outlook from Broadcom, which may not be isolated to Broadcom, maybe semiconductor stocks not looking so good from here on out.
Yeah, so late Thursday, Broadcom reported earnings. The sales missed expectations, and they gave a pretty weak outlook for the rest of the year. Now, Broadcom is a big supplier to Huawei, the China-based telecom firm. So
trade war fears.
So Broadcom is right in the middle of that because, again, they are a big supplier to Huawei. But, the stock closed up near its high. So Broadcom actually, a little while back, found support at its 200-day moving average and started to rally up close to the 50-day line. It was a pretty nice rally, but the gap down today just basically brought it right back down to the 200-day moving average. So sellers back in control here, and just a weak day overall for semiconductor stocks as investors start to question what demand really looks like over the next couple quarters.
Yeah, exactly. It's really looking like software is still holding out as that strong group. So it's key to be aware of not only how individual stocks are doing, but how the group as a whole is doing.
Yeah, and when you look in the semiconductor group, whether it's chip makers, chip designers, chip equipment firms, there's a lot of broken charts, a lot of charts that have been hit by institutional selling, and really the only exception is a name that we have on leaderboard right now, Advanced Micro Devices, and that pulled back to a buy point today, but it's generally been an orderly pullback for AMD. That's sort of like the shining star in the group right now, but chips generally not looking all that good here.
All right. Well, Home Depot was able to hammer out a gain today, up about 1.7%, slightly above average volume, and it is now approaching a buy point from a cup with handle base here, Ken. So Home Depot's looking strong.
It is. I mean, it's a really nice chart, and we mentioned the fact that the Dow and S&P 500 in recent days have marked several closes in a row above their 50-day moving averages. So resistance not an issue right now for the Dow. But Home Depot, you can see here a nice chart formation here. It's approaching a buy point of 208.39, and of course we talked about another Dow stock yesterday that made a huge move. Disney is right near a buy point as well. So a lot of these blue chip, high quality names showing strength in this market, and you can't ignore that. These could be, Disney looks actionable right now. It's kind of right near that buy point, and Home Depot approaching a buy point. So
yeah, that's right. And the relative strength line here, it's not at all-time highs, but it's at a short-term high, passing that area of the top of the handle. So that's also a positive indicator.
A lot of good price action in the Dow, and again, when you look at the overall market health, at least through the lens of the Dow and S&P 500, both of these indexes are really not showing bad technical action at all.
All right, well, that is good to note. And last but not least, let's take a look at IBD 50 member Comcast, which was able to retake its 50-day moving average today. So what do you make of this base? It's a shallower base, meaning it was able to hold up relatively well during the recent correction.
Yeah, I mean, the stock is still close to highs, and the move above the 50-day moving average today came in light volume, which, anytime a stock makes a move above the 50-day moving average, you'd like to see some volume behind the move. And we didn't see that with Comcast, but this is, another kind of liquid large cap name in the IBD 50 that is had a good day today. And there's a buy point here of 44.06 that is in play. It's got a couple more points to go to get there, but definitely a good one to watch. And if we can stay in a confirmed uptrend, which we still are, you want to look at setups like this, and they can yield more gains possibly.
Yeah, so just about 4% below that potential buy point there. So we will keep an eye on this IBD 50 name. And we also want to let you know, if you haven't checked out the latest episode of our Investing with IBD podcast, it is out now. So you can go to investors.com/podcast for all of the details on that. And we also have a webinar for you coming up next Tuesday.
I was hoping you were going to mention that.
Yeah, tell us more, Ken.
Well, I'm going to be doing a webinar with Chris Gessel about Leaderboard, our sort of a model portfolio of leading growth stocks. We're going to just talk about how we handle Leaderboard during different phases of the market, how we raise cash during market downtrends and start to put money to work during uptrends. So it's a lot about portfolio management, and we'll talk about some of the stocks that are currently on the Leaderboard portfolio. And it's going to be Tuesday, I believe, at 11:30 a.m. Pacific time, 2:30 Eastern.
That it is, and you can sign up now by going to investors.com/webinar. All right, everyone, thanks so much for watching. We hope you had a great week, and we will see you right back here on Monday.